All right, let's get into it. Today, we're going to jump right in and unpack the latest strategic update from Netflix, coming straight from the co-CEOs during their Q3 2025 earnings call. So let's see what's on their minds about the state of the streaming giant. Right off the bat, the leadership team faced the big one, the question that gets to the heart of it all. Just how healthy is the Netflix business right now? It's really the main thing everyone wants to know. And wow, co-CEO Greg Peters, he did not beat around the bush. His opening line was incredibly direct, super confident, and it really set the tone for the whole conversation. So let's break down what very healthy actually looks like in their eyes. First up, we're going to get a quick snapshot of the company's performance in the third quarter. This is the foundation, right? This is the context for all that confidence. So the big picture here? Things are looking pretty solid. Revenue landed right where they thought it would. And get this, their operating income was actually on track to beat their own forecast if it wasn't for this one-time tax thing down in Brazil. But most importantly, they're making good progress on their main goals. And, in this market, that's what it's all about, showing you can execute time and time again. Okay, so what are those key priorities they're talking about? Peters broke it down into 4 main engines that are really pushing the business forward. This is the heart of their strategy right now. First up, engagement. And we're not just talking good engagement, we're talking record-breaking. This is all about how much time people choose to spend on Netflix versus, well, anything else. And in this crazy streaming world, engagement is everything. It's the gold standard. More watch time means people are less likely to cancel, it's more valuable for advertisers, it's just a stronger business. And this chart, wow, it says it all, really. In both the US and the UK, 2 of their absolute biggest markets, Netflix hit its highest ever share of total TV viewing time this quarter. That means more of us are watching Netflix for longer than ever before. That's a huge sign of a healthy, sticky service. All right, let's move on to the second engine, and you'll see how this all connects. Their advertising business. Now, it's still kinda the new kid on the block for them, but it is growing incredibly fast. And what's just nuts here is the speed. I mean, look at this. Q3 was their best quarter for ad sales, period. And they're on pace to more than double their total ad revenue for the year. This is a huge deal, right? It's turning Netflix from just a subscription business into a company with 2 major income streams. That makes them a whole lot less dependent on just raising prices. Okay, third engine, they are going hard into live events. This isn't just about adding new stuff to watch. It's about creating those you just had to be there cultural moments. The kind of stuff that traditional TV and other streamers have built their entire platforms on. Netflix is now playing on that field, and they're playing to win. And talk about proof? This is it. The Canelo versus Crawford fight wasn't just a hit. They're saying it was the single most watched men's championship fight of this century. An event like this is a magnet for new subscribers, pulling in people who might not care about the latest drama series, but they absolutely will not miss the big fight. And that brings us to the fourth and final engine, gaming, but with a really cool twist, bringing it from your little phone screen to the biggest screen in your house. And they've made it so simple. Seriously, you just pick a game on your TV, pull out the Netflix app on your phone, and bam, your phone is now the controller. It's brilliant because they're using the tech we all already have. It's a super smart way to get into living room gaming without having to build an expensive console. So, that's the here and now. The business is firing on all cylinders. But then, co-CEO Ted Sarandos stepped in and basically said, "You ain't seen nothing yet." He wanted to shift the focus to the future. And this quote right here from Ted Sarandos, this sets the stage for everything that comes next. It's a pivot from celebrating where they are today to sizing up the absolutely enormous potential that's still out there. So how big is this opportunity we're talking about? Well, let's put some numbers on it. Think about all the money you spend on entertainment. Movies, video games, books, concerts, you name it. Right now, Netflix only gets 7 cents of every one of those dollars. When you see it like that, you realize their competition isn't just another streamer. It's, well, everything. And it's the exact same story when it comes to our time, our attention. Even in their most successful markets, Netflix only accounts for about 10% of the time we spend watching TV. That leaves a whopping 90% of our TV time that's still up for grabs. So here's the bottom line from them. You take those 2 numbers together, and the path forward is crystal clear. They see this huge runway for profitable growth. Not by chasing some crazy new idea, but just by doubling down on what they already do best, making great shows and movies. And to really bring this idea to life, Sarandos gave this perfect example of how their global strategy actually works in the real world. So let's dig into one of their biggest hits of the summer. We're talking about K-Pop Demon Hunters, their biggest animated movie ever. This is a massive deal because animation has always been Disney's turf, right? This shows Netflix can build its own world-class intellectual property completely from scratch. And Sarandos was clear about this. He basically said this movie is their proof of concept. It shows they have the ability to create these original, breakthrough hits that get everyone talking, that move the culture all around the globe. And the cool part is, it doesn't just stop with people watching the movie. The film blew up so big that it led to this crazy rare toy partnership with both Mattel and Hasbro. The fan demand for merch was just too huge for one company to handle. That's how you know you've got a real franchise on your hands. So let's wrap this all up. What's the big message from the co-CEOs? It's pretty simple, really. The business today is strong, no doubt about it, driven by this smart strategy covering engagement, ads, live events, and gaming. But the really exciting part for them is the future. They feel like they've cracked the code for creating these huge global franchises. And that really leaves us with the big, lingering question, right? If a company can manufacture these massive cultural moments out of thin air, and they're still just scratching the surface of our time and our entertainment budget, what's the end game here? Just how big can a media company like this truly get?